the E-mini is gapping up, and that blue line is the top of the 4-week trading range. Here's the daily chart. We're opening right at the top of the range, or right near the top of the range. The Globex high went above the top of the range. Bulls are hoping that the bull trend is resuming. I've been talking about the monthly chart a lot over the past 3 months because it's important. This is the weekly chart. The bulls would like the week to close above the high of 2 weeks ago, the top of the range. That would increase the chances that we're going up to a new high. The bears would like the week to close below the top of the range, hoping that we get a second leg down. So 1, pull back 2, and then a second leg down, 1, pull back 2. Monthly chart. I keep talking about that pair of outside bars, down in May, up in June, a bull flag, we triggered the buy, and a weak entry bar in July, but it still triggered the buy, so that made it likely that we would be sideways to up for 3 months. And although August sold off early in the month, we're now back above the midpoint, and we're fairly close to the open of the month. I think the open of the month is too far above for the bulls to get there today. So the month will have a bear body. And the midpoint of the month is probably too far below for the bears to get there. So monthly support and resistance are probably not going to be significant today. Today's the last day of the week. Also, weekly support and resistance, I think, will be important. And the most important price is that high from 2 weeks ago. So the bulls would like the 60-minute chart. That's the top of the trading range. The bulls would like the day to close above the top of the range, hoping that we get a measured move up. And the bears would like the day not only to close below the top of the range, they would like it to close below the midpoint of the month, which is this pink line down here. Remember, the high of August is way up, way up. Here's the high of August, low of August, high of August, midpoint of August. So these are the targets. The bears would like the week of the day to close below the midpoint of the month, and the bulls would like it to close above the top of the 4-week range. Those are the 2 important prices, and we're right near the top of the 4-week range, and makes me think we might oscillate around it, and then at the end of the day decide whether to close a little bit above it or a little bit below it. Whenever the market races up to resistance here, gapping up to resistance, and then just stops. You know, we didn't gap far above it, we didn't gap far below it, we gapped pretty much right to it. It makes me think that we're going to pay a lot of attention to it today. I have to leave at 9 o'clock today, but I will be back on Tuesday. The market is closed on Monday. That's the important magnet above, that's the important magnet below. That sell climax on the 60-minute chart is less important now. Here's the 60-minute chart. You can see, this is the top of the range right there. You can see we're right near the top of the range. And for the bears, it's a wedge, 1, 2, 3, and a double top. And for the bulls, they're hoping for the breakout and a measured move up. Whenever you have a big gap up, it increases the chances of a trend day. It increases the chances of a trend day up or down. And the bears are hoping that this is the high of the day and that we just sell off from here. The bar is not particularly big, so that weakens the case for bears trying to sell below the low of the bar. And also, when you have that tail, that will discourage stop entry bears from selling below 1. However, it's not good for the bulls either. They really needed a break, a gap far above the top of the range, and they did not get it. I want to make sure I have the correct price there. Yep, that blue line is the top of the 4-week trading range. Don't need both. Well, let me see. The red line is that high. I don't think we need both lines, so let me get rid of the red line. So targets are the top of the 4-week range and the midpoint of August. Whenever you see a gap up and then a bear close, you'll get a lot of traders just selling the market, betting that one of two things will happen. It'll go down enough for them to make a scalp, or it'll go up but reverse down. So it's a reasonable scalp. Far above the average price. Traders are willing to buy if the price action is far above average. And so far, that is not. So that is not enough to make the bulls buy. I said that when you have a big gap up, it increases the chances of a trend day up or down. But if there's going to be a trend and you have a big gap up, it's more likely that the trend will be up. And sometimes you'll sell off for a bar or two and then begin a bull trend from the open. Sometimes the market will sell off for a bar or two and then reverse up. Yesterday we sold off for 14 bars and reversed up. Is it always in short if we have consecutive bear bars? That's usually what traders want to see. They want to see consecutive bear bars always in short, consecutive bull bars always in long. Globex chart. That's the Globex high, and the bears are hoping that we're reversing down. The bulls are hoping it's a two-legged pullback, one pullback two, and that we go above the Globex high. Can you buy the low of 1? I typically do not. If you have a big gap up and a bear bar, even though it has a tail below, I typically do not take that buy. That bear bar, I think, increases the chances that we have an early high today. And increases it enough to make me not buy with a limit order at the low of the bear bar. Bears want to close the gap, and then they want to get down to the midpoint of the month, which is about 20 points below where we are. I do not think they will do that. I think what is more likely is we'll stay within striking distance of the blue line all day, and in the final hour decide whether the month will close above it or below it. Consecutive bear bars, but neither one closing on or near its low. So is it always in short? Yeah, it's probably always in short, but it's not strong enough for me to sell the close. Will the bulls buy above 2? I would not. There probably are sellers above 2 and sellers above 1. The bear is trying to accelerate down to close the gap above yesterday's high. If they do it, then the midpoint of the month becomes a magnet below. Traders selling stop above 1, which is fairly far above, so not a great sell to close trend, especially with 1 and 2 having prominent tails. Big bear bar closing on its low. I'm currently not selling below 3. And my thought is we have the tails 1 and 2, and the risk is big. Yes, we're always in short. Yes, we're probably going lower, but I don't like the tails 1 and 2, and then the very big bar 3. The tails 1 and 2 reduce the probability of a bear trend from the open, and the bigger bar 3 could be an exhaustion move. Remember, on the open, no matter how strong a move up or down is, 50% chance it will reverse abruptly without a micro double bottom, and that is a lot of risk. How much reward? Is it going to be a big bear trend day? It could be, but I'd rather sell after I see more evidence of it becoming a big bear trend day. Can you buy above 4? You'd need a pretty good looking bull bar like we had a couple of days ago. Big bear bar, reversal of 3 bear bars, 2 of them pretty big, yet a pretty good bounce. This is what the bears want: a collapse, a spike, and then channel down. Unlikely. Globex 5-minute chart, around 50% pullback. Back to the day session chart. So for the bulls, they're hoping that they get an opening reversal up from a test of yesterday's high, and that we close the day above the top of the 4-week trading range. At the moment, I do think we're going to get up to the top of the 4-week trading range at some point today. However, with the 3 bear bars, it's not a strong buy above 4. The bulls will probably need a micro double bottom or a surprisingly strong reversal up. But you can see the problem that the seller closed bears have. Bar 3, a bigger bar, so possibly climactic, especially since 1 and 2 were not strongly bearish. So what do? Do you buy above 4, possible low of the day? Do you sell the market, possible high of the day? You wait for more information. I would get out of shorts above a bull bar 4, especially if it closes on its high. And you can buy above 4, but if you're buying for a swing. That means you're looking for a trend. I think the math is better to wait for more evidence of a trend. So wait to see if 5 is a bull bar, or 4, 5, 6 are bull bars. At a minimum, the bulls are trying to prevent a bear body. We have a bear breakout 3. The bears want follow through that will increase the chances that we close the gap above yesterday's high. So for the bears, they're happy with a perfect doji. They just don't want any bull body. The bulls want to stop the selling, and a 1-tick bull body would be enough to make traders think the selling is drying up. Okay, the bulls achieved their goal, and they preferred to have 4 be a big bull bar closing on its high, but they were unable to get that. So you can see that little bull body will make bears hesitant. We still have a lot of room down to this gap, yesterday's high, so we still might get there. But that bull body will make bears hesitate. Gap up, strong sell-off, opening reversal up. Gap up, we sold off for a lot of bars and get a later reversal. Gap up, 4 bear bars, yet we held above the moving average and we reversed up. Not a great looking buy. A lot of the bulls will wait for 2 or 3 bull bars before buying, and the result was a swing up. This is what the bulls are hoping they will get today. Gap up, 4 bear bars, bulls buy above the bull bar closing on its high, hoping for a swing up. Here they did not get much up, but they did get a new high. Trading range behavior. tails 1 and 2, sell climax 3, bull doji 4, and then 5 outside up. Are we back to always in long yet? We have consecutive bull bars, and we have one that might be closing on its high. We might be, right? Bulls might need one more bar, but theoretically, it's a buy above 5. The bears have sold 3, disappointed 4, bought back their shorts on 5. They were able to get out. That increases the chances of this going up. I don't think it's a strong buy, but I think it's an okay buy. It's probably better to wait for another bar or two. For the bears, always the bears, I'd get out above 4. Outside up 5, outside down 6. So we have an 0-0 breakout mode pattern. Theoretically, it's a sell below 6 and a buy above 6. But the math is pretty bad here, I think, for stop entry traders. You sell below 6, your stop is above 6. You're risking a relatively big amount, and support is not far below. As for buying the close of 5, it's not a buy the close bar. For me, this is, it's an example of how a stop entry can be better than a buy the close entry. Right? So for me, if I were buying, I would be buying with a stop above 5, not on the close of 5. Likewise, I would not sell below 5. I'd wait to see 6 close near its low, and then possibly sell below 6. Right now, 5 is a buy signal bar. Consecutive outside bars. It's a 6 is a sell signal bar for that matter. But tails below, I think traders are not going to sell below 6. They might buy above 6, but I think a lot of traders are concerned. Tails 1 and 2, tails 4, 5, 6. Do I still think we're going to get up to the blue line above? I do, at some point today. But that does not mean it's easy to structure a trade. When you have sideways bars, big sideways bars, the math becomes difficult. Right? The risk is big and the probability is less. However, it's a credible buy above 6 betting on the low of the day. I was talking when that buy triggered. I then placed a limit order to buy at the original price and then scalped out 2 points higher. I was lucky. I was afraid that I would not be able to get in, but I did get in. Why did I not hold on to the position? I could have, but I don't like all those bear bars. 4 of the first 6 bars are bear bars. I showed that one sell climax reversal. What kind of day did we get? Trading range day. We have pretty good early selling and you get a reversal up. Usually you do not get a strong bull trend day. I talked about that yesterday, that we had pretty good sell-off on the open, and therefore if we were going to get a bull trend day, we probably would have a hard time getting much above the earlier high of the day. And you can see we just went sideways for the rest of the day. For the bears, it's 2 legs up, 5, 7. It's a pullback from a reversal down, so it's a low 1. But I also think it's confusing. Right now, I think we're probably always in long. We triggered an 0-0 buy, and we have an opening reversal up from near the moving average. But it's not strong enough up for me to buy closes. For me, unless I see a pretty convincing setup on the open, I prefer to scalp for a couple points, sometimes 4 points. This should go higher. As I said, I think we're going up to the top of the 4-week trading range. On the Globex chart, we went above that price. You can see the Globex high is around 29.46. and that's above the top of the trading range. But we have 5 bear bars on the 15-minute chart and a doji buy signal bar. So this does not look like the start of a big bull trend. Today has, I think, a pretty good chance of staying around the blue line all day. And then at the end of the day, the market decides whether it'll close above or below the top of the 4-week range, which is that blue line. If the bulls get a weekly close above the top of the range, theoretically, it increases the chances that the bull trend on the weekly chart is resuming. But unless they close far above the top of the range, I don't think a close just a little bit above the blue line adds much for their case. Also, I do not think they're going to get a close far above the top of the range. So I think if we close above the top of the range, we'll probably just close a little bit above, and traders will wonder if the 4-week type trading range is still intact. The bulls would need a close way up here, far above the top of the range, for traders to start to think that the market is resuming up like this. This is a close far above that, right? So the bulls would like something like that today. It's possible, but not likely. Always in long, I think the big bull bar 7 and the consecutive outside bars, outside up 5, outside down 6, is enough to make it always in long. However, a lot of trading range trading. Tails 1 and 2, doji 4, outside up 5, outside down 6, tails top of 7, tails top and bottom of 8. So always in long, probably going higher at some point today, probably above the blue line, but probably not going to be a big bull trend day. Probably it's going to be sideways, and then at the end of the day, the final hour, get drawn to the blue line. If we're below the blue line, we'll rally up to it. If we're above the blue line, we'll sell off down to it, and then at the end of the day, either close a little bit above it or a little bit below it. Now, always in long. For the bears, they have a double top 1 and 8, but consecutive bull bars 7, 8, probably buyers below 8, so not a very good sell. We're starting to get near the end of the first hour. Traders are starting to think about how the 60-minute bar will look. The bulls would like it to close on its high and above the blue line, the top of the 4-week range, and the bears would like it to have a bear body. They really would like a bar closing on its low, but that is unlikely after the bulls triggered the 00. Gap up, double top, but we're on the 00 buy. We have consecutive bull bars, a big bull bar 7, probably more buyers than sellers below 8, so low probability sell. Always in bulls, what do? I would not get out below 8. You know, if you're a scalper, you've already scalped out with 2 points. If you're a swing trader, your stop is below 6. Can you get out below 9 if 9 is a bear bar? I think if you're long, you probably are holding with a stop below 6. And for the bears, I would not take this short. Can you buy 1 point, 2 points below 8? I did not, although it probably mathematically is okay. Bad looking, stop entry sell 8. So you'll have bulls who bought the 8 low, 1 point lower, 2 points lower, 3 points lower, expecting it to get back above that 8 low. Stop order bears, well, they have a bear bar, they have a double top, but a trading range open, and that is low in the range, plus we're still on that buy above the 00. So for me, I would not be short. I'm currently flat, and the bulls who bought that 8 low probably are going to be fine. At what point does it become always in short? For me, I think the bears need a break below the low of the day, and even then, it still looks like a trading range open. So there probably are buyers not far below 8, maybe around the moving average, yesterday's high. It would have been much better for the bears if they were able to get a good sell signal bar at 8. Most bears did not sell below 8 despite the double top because of the consecutive bull bars, with 7 being a big bull bar. Trading range open. After the first bar, we have a reversal up and a reversal down. That is a trading range open. Theoretically, the computers sell below the low and buy above the top. So we have 2 reversals, breakout mode. Do I ever do that? I don't think of it that way. Sometimes I'll buy above the high. For example, if it's the top of the 18-bar range, I'll sell below the low. Maybe if it's the bottom of the 18-bar range. But just having 2 reversals is not enough reason for me to buy at the top or sell at the bottom. Remember, trading range open means a trading range, and the probability is not very good buying at the top or selling at the bottom unless you have some other factors operating. Double top, double bottom, not a good sell signal bar 8, not a good buy signal bar 10. I think the best choice is flat. Wait for more information. When you get these trading range opens, sometimes the market will stay sideways for even a couple hours. Gap up, reversal down, pretty much sideways for a couple of hours, and then the bears got a trend. Here, this is an FOMC day, but it began with a trading range open. Here's the open of the day, sideways for a couple hours before we got a breakout. Traders look to sell below a small bear bar near the top, closing near its low, and they'll also look to buy above a small bull bar near the bottom, closing on its high, and they did not get the buy signal. There was a sell signal. Trading range open. After the first bar, we reversed up, we reversed down. Broke from new low of the day despite all these bull bars, yet the breakout failed and we reversed up. For me to think of this as always in short, I'd want to see consecutive bear bars, 11 and 12. Right now the market is paying attention to the 60-minute chart. The bears are trying to get a bear bar. You can argue a wedge, 1, pause, 2, pause, 3, and we're at the top of the range. What has the market done over the past month at this price? Sold off, sold off, sold off, sold off, sold off. And will we do something different this time? I don't know, but you have to be wondering if we're going to do what we've been doing. Difficult to sell here. You're right at support. Moving average yesterday's high. Plus decent bull bars. 5, 7. Bears trying to get a gap. We have a double top, so they're trying to get a measured move down. I always first look at the lower of the 2 highs for the measured move. Takes us to yesterday's close, which is also a magnet. And if it goes below that measured move, then I look at a measured move based upon the higher of the 2 highs in the double top. And for the bulls, they're still hoping for an opening reversal. They're trying to keep the gap open. But they need a very good buy signal bar, 11 or 12, which right now it does not look like they'll get. Reversals every few bars, trading range type price action. And those reversals every few bars tell you that traders are not swing trading. They're taking quick profits. So that's how I trade this kind of a day. Eventually there probably will be a swing, but you don't want to take 5 trades, all of them winners briefly, and then all of them became losers because you held on too long. So this is a scalpers type market, at least right now it is. When you see a sell signal bar that does not look good, that is trading range behavior. When you see a buy signal bar that is good, yet it fails to go very far, that is trading range behavior. So we have trading range price action going on. Bears looking for signs of strength. They want to close on the low of the bar. They want to close below 6. They're hoping for a measure move down to yesterday's close. And the bulls want the opposite. Not good, sell the close. Trading ranges, better to look to buy when the market is low and sell when the market is high. Is this enough to make it always in short? We do not have consecutive bear bars, but we have 3 bars without a bull body, and we ran the stops on the bulls. I'm not sure, I guess you have to call it always in short, but I'm not willing to sell down here. And with those 2 big bear bars, 9, 11, I'm not planning to buy above 12. So right now I'm trapped out. For the bulls, it's a high 2 legs down to the moving average, and they're trying to keep the gap open. High 1, high 2. So high 1, high 2 after a gap up. A bigger high 1, high 2 after a gap up near the moving average. Despite the 3 bear bars, bull bar closing on its high, traders start to buy above bull bars, hoping for an opening reversal up. Not good sell the close, but I think we're always in short. So right now I'm trapped out. That's the high 2 at the moving average, micro double bottom, but not a very strong buy signal bar. Bar 12 closed near the end of the hour. Here's the start of the hour. So we have a bear bar on the 60-minute chart. And a pretty tight bull channel, so it's not a strong sell setup. So it might not be a lot of sellers below the low of that bear bar. What do I think we're going to get? This or this. I think we're going to be sideways. And then at the end of the day, decide whether to close above or below the blue line. Less likely, we're just going to sell off from the top of the trading range. You can see not a lot of bulls willing to buy above 12. Probably not a lot of bears willing to sell below 12, despite a decent sell signal bar on the 60-minute chart. Pretty tight bull channel. Usually a tight bull channel does not become a bear trend without first going sideways for several bars. Not a strong buy above 12, a doji after big bear bars. So limit order bears hold it. Not a strong sell low 13, a low 1, but 2 bull bars at the moving average and just above yesterday's high. So the limit order bulls bought it, but everybody right now looks like they're scalping. The market does not go more than a bar or 2 before the move ends. The market's deciding, are we going to close the gap and get down to yesterday's close, or are we going to reverse up and get up to the top of the 4-week trading range? And it's still not clear. Market's deciding. Globex chart, still a possible bull flag, strong bull trend, and wedge pullback 1, 2, 3, testing the breakout point. The bears have a breakout. They have a second leg down. They don't necessarily need to get a third or fourth leg down. The minimum objective has been met. Surprise bar, second leg. Bulls trying to get a credible buy signal bar, hoping to resume the earlier trend. For the bulls, a micro double bottom, 12-14, but 3 dojis. So not a lot of bulls are going to buy above 14. And for the bears, they have a low 1, 13, but nobody sold it. It's still above the moving average. I think we're always in short, but I do not think this is going to be a big bear trend day. So I think it's a bear leg and what will end up as a trading range day. You can argue 8 by the close, 9 disappointment, and the by the close bulls never had a chance to get out. And therefore the bulls have bought the 7 close, the 8 close. A lot of them are still long, and they'll buy more lower, expecting the market to get back up to that 8 close later in the day. And right now that is more likely than not. So better than a 50-50 chance we're going to be back at the 8 close at some point today. The 60-minute chart has a sell signal bar for the first hour, and traders are deciding, can the sell trigger? Can we get below that 12 low? And if it does trigger, will there be more buyers or sellers below? We have a lot of bear bars and a lot of prominent tails. Both of those things make a big bull trend day unlikely. However, I still think we have a magnet at the 8 close, and unless we start to accelerate down, I think the market will get back there at some point today. Limit order trading for the past several bars. They bought below 6, they bought below the bull bar 13, they sold above 12. Will they sell above 15? No. Why did they sell above 12 but not above 15? 12 was the first reversal up after a reasonably strong sell-off. This is a second reversal up, and traders will be less willing to sell the second reversal up, especially since we have not had a close below the moving average all day. Possible bull leg, possible bear leg in our trading range, and therefore bulls might buy above 15, but they really want 15 to close on its high. Otherwise, I think they will not buy. We have two big targets just below: the 60-minute low bar 12 and yesterday's high. It looks like we're probably going to fall below yesterday's high, but bulls are trying to prevent that. Will we collapse below yesterday's high? I don't think so. A lot of bars with very prominent tails, plus a couple pretty good bull bars. This is probably going to be a bear leg in a trading range, which means we'll probably get a bull leg at some point. That triggered the 60-minute sell signal. We went below the low of that bear bar, but you can see hesitation, one tick below, and we're hesitating. Bulls are trying to prevent a bear trend day. They're trying to keep the gap open. Always in short, but not good stop entry trading, selling below 13, selling below 12. If the bulls get a decent bull bar 16, that would be a second reversal up from the breakout below 6, and it would also be a wedge 6 and 12. Traders are hesitant to trade with stops when the market has prominent tails and lots of reversals. But if 16 closes on its high, that would be a credible buy setup. Do I think it'll close on its high? No. Look at the past 15 bars. Not good stop entry trading. What happens if 16 has a 2-tick bull body? Bears, I'd get out of shorts. Some bulls will buy, others will wait to see if 17, 18 are pretty good bull bars closing on their highs. Then they'll buy, betting that this is the low of the day. Wedge bottom at the moving average, keeping the gap open. So the bulls have some things that are good for their case. Whenever you have a wedge bottom, you've got to be thinking about reversal low. And you also have to be thinking about the possibility that the market quickly reverses below the wedge bottom. So you trigger the buy and then you quickly break below and fall for a measured move down. So never only look at one possibility. Always be aware that the exact opposite of what you want can also happen. So bulls wanting less risk, buy above 16. Bulls wanting higher probability, wait to see what 17 looks like. See if the bulls get consecutive bull bars. Wedge bull flag at the moving average, 50% pullback from this low to that high. So it's a credible candidate for the low of the day. It's a reasonable swing buy. Higher probability, wait to see if 17 is also a decent bull bar. All of these tails and reversals all day long today, that makes this a lower probability stop entry buy setup. Can you sell below 16? Arguing a failed bottom. I would not. Selling with a stop at the low of anything has not been good. Selling below 4, below 5, below 6, below 12, below 13, 14, 15. Every one of those sells, bulls made money. Very often, around bar 16, around bar 18, you get a reversal. So the bulls are hoping, and it often comes around 16, bar 16, 17. So my band is usually 16 through 20 is when you often get a reversal. So this is the time window when you often get a reversal. This is what I was talking about the possibility of a break below a wedge bottom. I was saying that if the wedge triggers, if 17 went above 16, then the bears might get a break below 16 and a measure move down. But sometimes the buy does not trigger, and you simply break below the wedge and you accelerate down. Stop entry buy for the bulls 16. Not such a good stop entry sell for the bears below 16 or 17. But we're always in short. Hard to get short. Not a good low one. 13. Selling at the low. You want a bear trend to be very strong. This is not very strong, and therefore the math is not very good for selling at the low unless it starts to become stronger. A series of bear bars, 3, 4, 5 consecutive bear bars. I want to make a point about 16. It's a good looking buy setup. The bears do not want the buy to trigger, and therefore when you get that bull close 16, you'll have a lot of bears selling the close, trying to prevent 17 from triggering the buy. Traders have not been willing to sell at the low. They're selling rallies and they're buying back the shorts at the low. And their scalpers would like to get a gap. They'd like 17 to close below 16 and then possibly get a measured move down. Globex chart had a spike in channel, bull trend. Here's the 15-minute Globex chart. I'll put up a 5-minute chart. Spike pullback channel, and look where we are. We're testing the bottom of the channel. Usually the market gets down to the bottom of the channel and then transitions into a trading range. And we've had a lot of trading range trading. This is the open of the day. We've had a lot of trading range trading so far. So that's consistent with this a trading range, and spike pullback channel getting near the bottom of the channel. That is also consistent with possible trading range. Very big Globex range, so it's possible that we do not break out of the Globex range. A couple times a month, the market will not break below or above the Globex range. We had that happen a couple of days ago. Always in short, but not good sell the close. And we're not getting credible bounces to sell either. I'm currently flat. Bull is trying again for a wedge bottom, 6, 12. Bar 18, the market often reverses or breaks out on 18. The bulls want a bull bar closing on its high. If they get it, the bears will buy back shorts, and a lot of the bulls will buy or start to get ready to buy. Sometimes you'll get a break above the top of the 18-bar range, but it begins with a reversal up near the bottom of the 18-bar range. The blue box, the first 18 bars, were at the low of the range. Bull bar closing near its high. Bulls will start to buy, betting that will break above the top of the range. Near the bottom of the range, reverse up. Near the bottom of the range, bull bar closing near its high. Bulls bought. They start buying above the bull bar. Some wait for a second or third bull bar near the bottom half of the range, around bar 18. Traders look for reversal. Here, bar 18 was the low. Despite all of these bear bars, a bull bar closing near its high, bulls bought. With all that early selling, the day was unlikely to become a big bull trend day. We broke above the top of the range, but not by much. If we break below the bottom of the 18-bar range, traders look for a reversal within the next 3 bars. Once you break below the bottom of the 18-bar range, only 10 or 20% chance you'll get above the top of the 18-bar range. This is bar 18, so we have not broken out of the 18-bar range yet. Right now, maybe 20% chance we'll see a new high of the day, maybe 30% chance. Every bar that gets added reduces the probability that you're going to get a new high of the day. If this was bar 81, then maybe less than 1% chance we would get a new high of the day. Okay, what did we just do? Bar 18, bar 19, we just broke below the 18-bar low, right? And to buy, the bulls need a strong bull bar. Bears hoping that we get a gap, 19 high, 17 low for a measured move down. This is becoming a sell the close market here. Bulls giving up, traders are selling at the market. Testing yesterday's close, we have a measured move based upon that double top. But a big enough surprise, most bulls are not going to buy the first reversal up. To get a collapse like that, you need a whole bunch of stocks to go down, and therefore this usually corresponds to a pretty negative tick reading. 1 minute chart, and ticks got down to maybe 800, minus 800 or so. Usually that's not the final low in price. We have a new tick low for the day. The midpoint of August is coming into play. Remember I said that at a minimum the bulls would like August to close above its midpoint, and the bears want August to close below the midpoint. So it looks like that will be the magnet today. We tried to get a wedge bottom 16, and we're breaking out below. 18 is the breakout bar, so maybe the breakout point is the 17 low. But I'll use that. So you got to be thinking of that possible measure move from either that or from that. We have another important target below, so this measured move target I think is not as important as it might be. We have a more important target here. Can this be a trap, a break below a wedge bottom? Yes, but with that much selling, the bulls will probably need at least a micro double bottom, so I would not buy above 20, even though possible second leg trap. First leg wedge, and then second leg bear breakout that fails. Tried to get a wedge bottom and then collapsed, but instead of the start of a bear trend, it reversed up, second leg trap. This is what the bears are hoping, this is what the bulls are hoping will happen. Micro double bottom, higher probability for a reversal up. Tried to get a wedge bottom, instead broke strongly to the downside. It became a trap. Look to the left. We still are in a trading range. Triangle, bear breakout, micro double bottom, reversed up. Typically, if you have a very strong sell-off, even if it's a bear trap, you'll need at least a micro double bottom. Here, high 2, high 1, high 2. Profit taking bears, short covering their shorts, taking some profits after a big windfall. So I would not buy above 20. You might buy to get out of shorts if you're still short, but I would not get long above 20. I would wait for at least a micro double bottom. If you cannot buy above 20, can you sell the 20 close? They're a pretty good bull bar 5, they sold the close. Pretty good bull bar 16, they sold the close. Probably more sellers on this rally than buyers, so I would not be buying. Aggressive bears are selling. You got sell the close bears 19. This is the disappointment bar 20, so those bears will possibly look to get out of their shorts if we test back down to the 19 close. So some of those bears, they sold the close 19, and they'll sell more higher, 2 points higher, 4 points higher, and then try to get out, break even on their first sell on a test of the 19 close and with a profit on their higher sell. There are several ways to draw a measured move. The breakout point 16, maybe the breakout point 17 is the top 1, is the top 8. So we got several different possibilities. This is one of the possibilities. For the bears, 20. If it's an inside bar, it's a low 1, but we're in yesterday's trading range and near a price where the market turned up yesterday a couple times. So not a strong low 1 sell. Can you buy below 20? I would not. But this is a disappointment bar. The sell to close bears 19, disappointed 20. A lot of them will try to get out break even. So they'll place limit orders to buy at the 19 close. And you can see that tail in the bottom of 21. That tells you that a lot of the bears who did sell the 19 close are deciding maybe I better get out. Some of them place a limit order at the 19 close. Some will place it a couple ticks above, willing to take a small loss just to get out. Can you get long above 20? Nope. Even though it's a possible bear trap, it's not a good buy signal bar. So I would look to buy after there's a good bull bar closing on its high. And even then, this is such a strong sell-off, I'm not going to buy above 21. If it's an II, then I might buy above 20. A lot of the low 1 bears, 20 will scalp because of the bull body and at the bottom of the trading range. I did sell below 20 and I scalped. Remember the extreme tick reading on 19, okay, very low tick readings. This is probably not the final low in price, so traders will sell either with limit orders 1 or 2 points up or with stops on the 1 minute chart, 5 minute chart, on any kind of a chart, betting that this would not be the final low at the Globex low. So even though we had a very strong rally and we opened up here close to the Globex high, we did not get above the Globex high. Instead, we broke below the Globex low. Should be some profit takers at the Globex low. Only 10% chance we'll get back to the high of the day at this point. And that means the day will probably either remain a bear trend or enter a trading range. The market's ignoring the measured move projection, so I will ignore it as well. You can see it's exactly to the tick at the midpoint of August. I made that point yesterday that the market looked like it was paying a lot of attention to the midpoint of the month. Yesterday, early on, we oscillated around the midpoint of the month for 20 bars. And I did not think we would get there, but I did think the two magnets today were the top of the trading range and the midpoint of August. And here we are. So we may end up going sideways around here for the rest of the day. Sometimes if you have a strong trend on the open, the market enters a trading range. Here we had a strong rally, trading range. Here we have a strong sell-off, and we're at an important price. The bears really cannot accomplish much more. So we may end up oscillating around this price for the rest of the day. If the monthly, this is the midpoint of August. Today is the last trading day of August. Monthly chart, we're exactly at the middle of the month. And if the month closes above its midpoint, it's a subtle sign of strength. I think of the bulls as owning the month, so it's slightly more bullish. If the month closes below the midpoint, I think of the month as slightly more bearish. Very big bars. Traders are selling for any reason but climactic, so it increases the chances of a sharp reversal. We're at an important price, so we may start to enter a trading range here. So what was the news? I don't know and I don't care. Remember yesterday with the news of the China trade deal possibly happening, I said it's stupid. The institutions already know that the trade deal is going to be on again, off again. And just because China says they're interested in talking, it means nothing. We already know they're interested in talking. And if there's ever going to be a China trade deal, it's not going to be this week or next week. It'll be next year or after that. Any kind of a trade deal will be extremely complex, and it's not going to happen a week or two after China says, okay, let's talk. If I were China, I would not strike a trade deal, at least for a year, because I would not want to deal with Trump. Also, by not striking a deal, you increase the chances of Trump not getting reelected and then getting a president who will make a deal that is better for the Chinese. So I don't understand. I don't see an incentive for China to hurry up and get a trade deal done. Climactic, so there's an increased chance of a sharp reversal, but the sell-off is so strong, and we're now at an important magnet on the monthly chart. I think we're not going to get a big reversal. So the best the bulls will get today probably is a trading range, not a bull trend. Can you buy above 22, 23? Sell climax, second leg down. I don't think it's worth it. I would wait for a better looking bottom. If it's an inside bar, can you sell below 23, a low one and a bear trend? We're right at a really important price, so I don't want to be selling down here, and the bulls have not done enough for me to buy, so best choice is I've stopped selling right now, so I'm flat. I'm going to look at ticks. We collapsed there. Ticks minus 800 here, minus 1,000 here. Probably not the final low in price. We went a little bit lower, but no sign of a bottom yet. This is a 1 minute chart, very tight bear channel. Does it still sell the market, sell closes? I think the risk is too great. You stop right now, probably at a minimum above the sell climax high, the most recent sell climax high. So your stop is up here, so you're risking more than 10 points. And how much profit do you think you'll make? Do you think you'll make 10 points selling right here? I think there'll be a pullback before it falls 10 points. So better to sell a bounce, a rally. And for the bulls, can they start to buy below bars? Well, they are. They bought the 21 low, bought more lower, and they made money. You can see the 23 high above the 21 low. But that's for computers to do, not individual traders. Individual traders, you're either short or flat, or waiting. You're probably waiting. 60-minute moving average, next target below. 24, the end of the second hour, and a huge entry bar for the bears who sold below that first hour. Wedge 1, 2, 3. Wedge 1, 2, 3. Top of a trading range. Very strong reversal down. Not quite as strong as this, but strong enough to get some follow through. Here we had follow through for the rest of the day. Strong sell off, some follow through. Strong sell off, probably some follow through. This is too climactic. You can argue spike and parabolic wedge, spike, pause, first push, pause, second push, pause, third push. So on a smaller time frame chart, this might be a parabolic wedge. I think we're going to oscillate around the midpoint of August, possibly for the rest of the day. But I also think that the best the bulls can hope to get today is a trading range. It's unlikely that they'll get a significant swing up. Bears, I'd get out of shorts above any bull bar. And let's say 24 is a huge bull bar. I would get out of shorts 4 ticks above a bear bar, 23. Climactic, possible spike, pullback, parabolic channel. So target at the 21 high. Because of the spike in parabolic channel, can the bulls buy above 24? The problem they have is they're buying a huge sell-off. We have a 10-bar bear microchannel. So if they're taking that buy, they probably have to risk 10 points and be able to scale in lower. So I think it's not a very good buy. I'd wait for either 2 or 3 bull bars and then start looking to buy, maybe buy with limit orders initially. But for the bears, I would get out of shorts above any bull bar. This is so climactic. Now, how can it possibly be doing that? Well, because this whole thing may have simply been a sell vacuum test of a very important price. And now that they were there, the bears are saying, wow, what a big gift. I'm going to take my profits. So I suspect that we've begun a trading range, and top of the range might be the most recent sell climax high, which is here. Typically corresponds to around the moving average. This might be the opposite of what we had the past couple of days, where you have a sell-off in a trading range. Past couple of days we've had rallies in a trading range, rallies, trading range, rally, trading range. And this might be the opposite. It might be sell-off, trading range. Is it buy the close? First reversal up after a sell climax, usually minor. So not a great buy the close market. Probably will get a couple legs sideways to up. So anybody buying for any reason, stop is below 24. But even if it were to fall below 24, probably buyers below. This is a big enough reversal up to encourage bulls to look to buy. Still always in short, and a minor reversal. Probably we're going to get a couple legs sideways to up to around the moving average, maybe the 21 high. Short covering. All the bears who sold are thinking, uh-oh, a lot of people are taking profits. I better take profits as well. So most of this buying is bears buying back shorts. The bulls who bought were buying down here, and they're less willing to buy this far up. This is bears panicking out of their shorts, knowing that they sold in a sell climax and that a lot of bears could suddenly buy back shorts and we could get a very strong rally. Probably less than a 10% chance we get to the high of the day. You know, I said this is a spike in parabolic channel. Well, this is a spike and this is a parabolic channel. So it can be very similar to what we had, we've seen it a couple times lately. We saw it in December on the daily chart. Now put up a Globex chart, Globex 60-minute chart. Spike parabolic channel, huge reversal up to near the top of the parabolic channel. So spike parabolic channel, 5-minute chart, spike parabolic channel. So we may, I would say 30% chance we're going to come all the way back up here today. Is it buy the close? Only if you can use a really wide stop. Probably we'll get at least a couple legs up. Can the bears sell this close? Nope. The bears are panicked. They're buying back. They're desperate to buy back their shorts. So I would not be selling when the bears are buying. If we get a couple legs sideways to up, then maybe look to sell around the moving average, the 21 high. That same kind of parabolic sell-off took place in December. Spike, pullback, parabolic channel, and we got a huge reversal up far above the top of the channel. So you can see it's kind of a common pattern. I just showed you an example on the 60-minute chart. Here's an example on the daily chart. And today we have an example on the 5-minute chart. Spike, pullback, parabolic, sell climax. So for the bears, double top 20, low 1 in a bear trend, but big enough reversal up. Most bears are not going to sell below 26, probably buyers somewhere below. Recent sell signal bar. Well, what's your goal? Are you expecting a new low? You're not going to get it. Are you expecting a 1-point scalp, 2-point scalp? You might get that, but you're risking 3 points to make 1 or 2 points. So this is not a good sell. For the bulls, it's a high 1, a pullback in what the bulls hope is a bull trend, but it's a bear bar. And we're near the targets, the 20 high and the moving average. So probably sellers not too far above and probably buyers not too far below. I think we're always in long, but I also think this is a minor reversal and it will lead to a trading range. So there's hope that it's still short, but it's not, right? It's always in long. So not a good short below 26. High 1, always in long, but we might get more of a pullback. So anyone buying here, stop below 24. And the potential reward is not great. There probably will be profit takers not far above. So it's probably more of a scalp. Big down, big up, big confusion. So possibly back to trading range trading. Good candidate for the low of the day. This is probably the high of the day. Bulls hoping that we totally undo all of this and get back up here. Right now, maybe 30% chance. But if we start to get a series of bull bars, it becomes 40, 50, 60% chance. So the bears sell the moving average, the 25 high. We're always in long. And, I think it's better to focus on buys. But I also think that it's more likely that this is a bull leg in a trading range than the start of a strong rally back up here. As I said, though, if we start to get 2 or 3 bull bars, the probability goes up that we get all the way back to the channel, top of the channel. So the spike, pullback, parabolic wedge. I think most bulls, 27, will scalp. Either 1 point, 2 points at the moving average at the 21 sell climax high. So this is a profit taking area. Is it by the close? It's very good for the bulls, but we're at an area where a lot of the bulls will take profits. The 21 sell climax high, the moving average. So I'm taking profits. I'm not going long here. What happens if we get 1 or 2 more bull bars? Then I might start to buy closes. And for the bears, short double top 20. The math is difficult. I think we've probably seen the low for the next hour or 2, possibly for the rest of the day. So if you sell, where's your stop? Probably way up here. And nobody wants to risk 10 or 15 points to make 1 or 2 points or 4 points. So it's really not good math for the bears. You can see some selling at the moving average and at the 28 close. It's probably more bulls taking profits. Might be some bear scalpers. For the bears, double top 20, a low to 26. Swing sell below 29. Sometimes you'll get a bear trend with a huge rally like this. And you look to the left, possible double top. It actually becomes a double top. And we break below the neckline and fall for a measured move down. In general, if you get a bear bar at the double top at 29 and 30 falls below it, 40% chance you break below the neckline and fall for a measured move down. When the rally is this strong and it comes in this dramatic a sell climax, maybe only 30% chance the bear selling below 29 will get a strong break below 24. So not a strong sell. Strong bear trend, very strong rally. But if you get a bear bar, traders will sell looking for a swing down. It was unlikely to get that kind of a swing down, maybe 30 or 40% chance, but that means it happens 30 to 40% of the time. Here's a bigger double top and a bear trend. Bear trend, very strong rally. Bear bar, moving average. Traders sell below the low, hoping for a measured move down. Very strong bear trend, very strong rally, but moving average, look to the left, maybe there's a double top there. Traders will sell below the bear bar, similar to today. Strong rally, double top, near the moving average, bear bar. So bulls, I'd get out of longs below 29. Bears willing to take a low probability bet will sell below 29. Otherwise, I would wait. Bears, looks like they scalped. Sometimes, if it is going to be a double top bear flag, sometimes you'll trigger the sell like this, go sideways for a few bars, and then go down. And for the bulls, it's another high one. While I thought buying 27 was good, I'm not buying above 30. We're right at the moving average, and we triggered a double top bear flag sell. So plus I have to leave in a couple minutes, so I'm not going to take that short. Market's deciding: double top bear flag, test the low, maybe break below the low, or parabolic sell climax, reversal, get back up here. And we may have to go sideways for an hour or more before the market makes its decision. Looks like the midpoint of the month is still important, and it's unlikely that we're going to get back above the top of the trading range. So the weekly magnet above, we're probably not going to get there, and that leaves us with a monthly magnet here, and therefore it increases the chances that we're going to form a trading range around the midpoint of the month. Confusion, not a good high one. If you're looking for a reversal back up here, you don't want the market to race up to resistance, moving average 20 high, and then stall. So I would not buy above 30. The bears selling probably are scalping, are always in long, and bulls probably want to buy lower. Maybe they'll get a test of the pink line, the midpoint of August, and then get an attempt at a higher or low major trend reversal. Okay, I have to go after my daughter is getting married around Santa Cruz tomorrow, and there are wedding things going on today, so I have to head out. Hope everybody has a good weekend. Monday is a holiday. Market opens again on Tuesday.